What's going on, everybody? What do we got here? Monday, August 9th. How do you like the haircut? Oh man, it was a rough day, folks. Rough day. I'm going to get into it. You know, it's what this business is all about. I mean, there's ups and downs. A lot of times I talk about mental toughness and resilience. And how do you get it? You got to go through periods like this from time to time. So let's break it down. Actually, stocks were good today. My portfolio was up on stocks. But big liquidation in the precious metals, in gold and silver. Bond yields popped up. Dollar was up. But I want to talk about this liquidation in gold and silver, which I have positions in, long positions. And last month, maybe some of you might recall that I spoke about a very, what I thought at the time was a very bullish setup for silver. Now, I'm normally not a big silver trader. As a matter of fact, I can't even remember the last time I was really active in silver, although I was a COMEX floor trader back in the day, but I tend to stay away from silver. But the conditions last month, late last month, that I spoke about were a very small short position on the part of silver producers, okay, in that weekly CFTC commitments of traders report, which I look at and I break down every week. I had been watching as producers who are normally, aggressively short the metal because they have the physical, they're locking in their profit. They had been bringing that short position down. They had been cutting that short position for weeks. It got to a very low level. I believe it was like down to the lowest level in over 2 years. Open interest dropped way down also, I believe, to about the lowest level in 2 years. So the market had already seen a large amount of liquidation up to that point when I was starting to talk about the bullish setup for silver. And at the same time, long commitments by speculators, that's, managed funds and small speculators, they had also reduced their long position to a very low level. It was like a multi-month, maybe also like a 2-year low or something like that. So this combination where you had producers, okay, silver producers, actively reducing their short position, okay, and they're usually very savvy when it comes to the commodity that they deal in. I mean, they are the producers of the commodity. They know the physical market. They know the cash market. I've dealt in the past with people in the trade, meaning people in firms and companies in that particular commodity. When I was on the NYMEX, I was executing business for a large oil company. These oil companies, any producer in a particular commodity is really the most savvy player when it comes to that commodity because, I mean, they're on the front lines. I mean, they're either, producing it or merchandising it or bringing it into refine or whatever. So they're in the cash market, they're in the physical market, they know. So when I saw that combination of factors, okay, producers cutting their short position by a significant amount, speculators getting out of the market, not long, open interest way down, which means like participation was really low. Historically, that's a great setup for a big rally. And the last time that happened, like 2 years ago, we had a huge rally in silver. So those were the conditions back then, and that led me to believe, we'd see some kind of a very significant move higher. Then came Friday, all right? And that was just the start. So Friday, we all know what happened on Friday. You had comments by Clarita, Fed Vice Chair Clarita. I talked about it. I did a video on it, how, he said, well, we might start talking about taper in November or December, and all of a sudden, boop, the market expectations for a conversation for the Fed raising the prospect of a taper. Okay, we don't know how big that's going to be. And it was just, let's start talking about it in November and December. The probability shot up. So we saw bonds go down, we saw bond yields go up, we saw the dollar go up, and we saw precious metals come down hard. Now Friday I made a video. I said it was an overreaction. I still happen to think it's an overreaction, but boy, today's move starting early this morning, like late Sunday night, early this morning, I mean, it was just a scary liquidation. It was like one of these, flash crashes that, we see from time to time in different markets. And yeah, so I mean, I think now we flushed out all the spec longs. I think they're short. I mean, I don't have the numbers now because we'll see them on Friday when they come out, but my guess is that the spec longs in the market, that means managed funds and small speculators, and I said before, they were long, only a very small position. I think that got totally flipped around. They got blown out. They're probably net short right now. I suspect that producers use the pullback, to cut their shorts as well. But man, it was a rough one. I can't come on here and say every time is easy. This is not easy, but this is part of the game. This is part of the game. I don't know if I mentioned this, but I've trained in Brazilian Jiu-Jitsu, on and off for a number of years. And the one thing you learn in Jiu-Jitsu is you got to stay calm when you're in a bad position. When you're rolling with an opponent and he has you kind of like in a compromising or a bad position, if you panic or freeze up or tense up, I mean, he's got you. Your opponent's got you. You got to stay calm and patient and wait for an out or wait for a possibility to, get out of that or reverse it to your favor. But you have to stay calm. As a matter of fact, Rickson Gracie, who is a 9th degree red belt in Brazilian Jiu-Jitsu, he's from the original Gracie family, which created Brazilian Jiu-Jitsu, okay? The grandfather of Rickson, or I believe it was his father actually, I believe his name was Helio Gracie, back in the early 1900s, he trained in Japan in traditional Japanese Jiu-Jitsu, but then he came back and he kind of morphed it into this new style, which uses leverage and submissions and the opponent's, strength or force against them. And it's a very popular sport. It's a very popular martial art. I mean, if you watch any of the UFC, a lot of these guys are Brazilian Jiu-Jitsu black belts. I'm a blue belt. But I mean, what I'm saying is that martial arts, and I've used the martial arts analogy a lot in the past in my videos. I mean, but the thing, and trading has so many of those same elements. Like you're up, you're down, you're up, you're down. It's a battle, man. It's a battle. And that's why I always say people looking for some easy path where it's just they're going to have some, the system fairy that's going to carry them to where they want to go. I mean, that's never going to happen. You're going to have these battles. So anyway, the precious metals liquidation, look, I'll be totally honest with you. I did not see this coming. And taper to me is not a bearish thing if you understand what actually happens. That is, effectively the Fed reducing its purchases of assets, and that means those assets stay in the economy, earning interest. That means fiscal flows via that interest channel goes to the economy instead of going to the Fed, where the Fed just hands it back to the Treasury. So I mean, people really don't understand what these asset purchases, I've spoken about this so many times. They all think it's stimulus, and they all think you're printing money, So I mean, when I see that they're going to taper, I mean, that's a positive thing for the economy. I mean, you leave that collateral in the economy, that's earning money, that's a fiscal flow to the economy. That's a positive thing. All right. But again, I understand the zombie reaction. When everybody, sees it the other way, and they see it as, oh, this is taking stimulus away. Yeah, that's their reflex reaction. And that's why I always say you have to go against that. But this was a big liquidation. And generally, when you see something like this, and I remember, if you want an example of this, I mean, we can go back to, I don't know, what was it? It might have been back in 2016 or 2017. We had like a flash crash in the British pound. Overnight, very quickly. I was actually at a restaurant and somebody said to me, Mike, do you see what happened with the British pound? I'm like, no, what happened? I mean, it was this massive move. Dollar pound went all the way down to like 108, okay? It's at like around 139 right now. Now, it took time for that to stabilize, but it all came back. It all came back, and it'll still come back with these commodities now. Because you still have a high level of fiscal support, all right? And now we're starting in a new credit cycle. By the way, I sent out the new edition of MMT Trader today. I talk about I really get into the credit cycle and how it's picking up. If you look at loans and leases, if you look at just about every bank metric right now is looking really, really strong. And it's been on this trajectory for around, 4, 5, 6 weeks now. So it looks good. So yeah, folks, mental toughness, you gotta just tough it out. All right, this is what develops resilience. It's all gonna be okay. It sucks when you have to go through it, but it's part of the game. All right, see you tomorrow. Bye.